Hello, everyone, and welcome to today's webinar on best practices for non-traded REITs, Europe and UK edition. First and foremost, I'd like to thank you all for giving us your time. We're going to talk about non-traded REITs today, and we're joined by Robbie Tanjung. So Robbie runs our valuation practice globally. He's been involved with most of Altus's NTR clients since inception, provides market insights, attends boards, presentations, and basically general advice around evaluation and evaluation policies in this space. During today's session, we're going to cover two sort of themes and topics. We're going to do a deep dive on the evolution of the US non-traded REIT market over the past decade through Robbie's experience to get an understanding of current market trends and best practices. But then we're also going to look at some of the main NTR markets in Europe and UK and try to understand where the differences lie between both. Before we start the webinar and we kick it off, a few housekeeping rules to help us make sure things are run smoothly. Note that this webinar is pre-recorded. You'll notice on the right hand of the screen that there's a chat box. You can ask questions. We'll do our best to answer as soon as possible. If we don't answer immediately, we'll give ourselves 24 hours to get back to you, but we'll surely get back to you via email. So maybe to kick things off, Robbie, we know the NTR space in the US has been a growing industry market, driving a lot of interest. We know you did a very successful webinar on the US REIT topic a couple of weeks ago, and we covered, during that webinar some of, the main evolution and the aspects of how REITs have evolved over the past 10 years. It would be really nice if you could walk us through some of the key milestones, but also explain at a high level, Altus's role in this context.
Thanks, Julian. Great. So I think before I start with the long history lesson, so I'll start with where the Altus kind of exposure is on NTR market, right, in the US side. So you can see here, we currently work with more than 20 non-traded REIT clients, both in equity and credit, and with assets actually throughout United States, Canada, and Europe, right? So they're both diversified as well as sector-focused fund. Overall, that we handle more than 5,000 assets per quarter, and with more than 150 billion in gross asset value on quarterly basis, right? So we go to the next slide, Julian. We'll start talking about the traditional non-trade rate. How did it start, right? So generally it started in 1986 Tax Reform Act, right? So it's several REITs simplification changes took place, which made the way to the initial non-trade rate, right? So it generally structured as a fixed share price, usually $10 to, or some cases $20 for the duration of offering, usually 2 to 3 years. Plus they are finite life, so they are closed-end fund, right? A closed-end fund structure, generally 5 to 9 years, right? So not very popular because very high upfront selling commission. You're talking about 7%, and the dealer management fee to 3%. There's also no transparency with closed-end fund structure as well. There's lack of liquidity. Redemption are limited up to 5% of the weighted average number of shares outstanding during the prior 12 months. Right, so a lot of cases as well that reflected arbitrary and penalized valuation to discourage redemption. Right, so because of this feature, there have been large litigation on this non-trade REIT, especially during the downturn, especially priced in significantly lower than initial $10 to $20 price, right? So then we kind of go to the evolution to what I call the modern NTR, right? So which is also called the NAV REIT, in some cases also called the non-listed REIT. Generally, it is perpetual life, right? So it's open-ended. Genesis of it is in 2000, but it's much more prevalent in 2017. Right, so it's registered offering through Security Act 1933. They filed SEC report under Security Act 1934. So it's very similar to a listed REIT. The only different thing is they're not listed on any security exchange. So therefore, it's called non-trade REIT or non-listed REIT. Right, so one of the most important feature of the current modern NTR, I kind of look at it as a frequent and systematic valuation. right? So usually daily or monthly, in some cases quarterly, or the majority of them are monthly, right? So valuation are generally provided by independent third party, and it's also administered and reviewed by independent third party advisor, like so generally known as independent value advisor here. The other thing as well is rotating cycle for appraisal as well, right? So one benefit of the current NTR, the streamlined management fee, lower and simple selling fee, right? So because it's semi-liquid product, they have a redemption limit, right? So it's 2% of NAV per month, but no more than 5% per quarter.
Yeah, no, thanks for that background, Robbie. Super insightful. And you mentioned transparency on several stances, and with transparency comes access to data. I know the NTR space in the US is quite transparent, and access to data is also available to private investors. Can you kind of walk us through some of these data points, and maybe focusing on the key capital inflow and outflows? That would be really insightful.
Yeah, thanks, you. And I think on the next slide, right? So we're going to show how popular is this non-trade REIT alternative market in general, right? So if you look at this slide in here, right? So it shows alternative market fundraising generally in US, right? So over 138 billion in 2024. We know capital rates have been difficult in institutional side, right? So, but look at the run rate in 25, $175 billion run rate as of February, right? So, and if you look at NTR, yes, it's only 6.1 billion in 2024 in public program. But if you add on basically the 10.8 billion through DST, which is Delaware Statutory Trust, and the REIT in a private placement, you're talking about 16.9 billion of non-listed REIT, right? So, and if you look at as well in the public program basis, like the non-listed REIT side, right? So they raised over 96 billion since 2020. That is a pretty impressive number, right? So then you go to the next slide, Julian, right? So I think that the one thing that's interesting to me is like, look at the name, right? They are a large institutional investment manager. The Blackstone, the Ares, KKR, Starwood, Apollo, and Brookfield. That's mean now the retail investor have access to this institutional professional, which is not available before, right? So, and therefore they got rewarded. So the top 50 have raised over 450 billion in the past 5 years through different alternative vehicles. And many of them have a lot of NTR. So you can see NL REITs, that's the NTR side. So many of them have this NTR kind of basically as one of the vehicle, right? So then you go to the next slide, right? So I think this also interesting as well, right? So some people might look at it, it's like, whoa, whoa, whoa. That's a very high redemption number, right? So you're talking about 12.9 billion in 2024, 18 billion in 23, another 12 billion in 22. That's $43 billion of redemption. But on the flip side, does mean the investor have able to pull out 43 billion in the past 3 years, right? So that show that vehicle work, right? So the current structure with semi-liquid product, right? So real estate, we cannot sell them tomorrow. And also in the declining period, it worked, right? So, and where it is today. So you go to the next slide in here, right? So the current NTR have about 92 billion NAV, right? So look at the total return, right, including income. Even in the declining market, that's a pretty good total return, right? So part of that reason is the capital allocation. If you look at the chart on the right side here, right? So minimum allocation to office, and much more about industrial residential, which performed pretty well in the US over the past 3 to 5 years. Additionally, as well, there's 8% of data center. There's a lot of development component have been doing pretty well. That's why it's holding up better than a lot of other vehicles out there, right? So, and then next thing you know, you're gonna ask me, it's like, okay, Robbie, how does the redemption look like, right? So you go to the next slide in here, Julian, right? So the redemption is 0.8% left. Pretty impressive figure, right? So majority of the client or the NTR client asset is no redemptions in late last year. They're able to redeem up in late last year, right? So that's also mean investors are getting the money back, right? So a lot of them in orderly fashion because this is still a semi-liquid product.
Yeah, and liquidity risk is always the elephant in the room here, Robbie. And you alluded to it earlier, relative to private markets struggling to raise, capital relative to the NTRs. But then we also know, some of the challenges that, these private markets have faced in terms of redemption queuing, especially over the past 12 to 24 months, probably exacerbated a little bit by some of the negative appreciation, elements, that, they had to deal with, and also historically low, I would say, transaction volumes. But when I look at this chart, I mean, it looks like, redemption levels are extremely minimal when it comes to the NTR market. What would you say are the key reasons? How would you summarize the key reasons, behind this?
Yeah, so that's several factor, right? So I think that all the NTR have liquidity sleeves, so they generally keep about 15 to about, in some cases more than 20% in liquid asset, right? So, and this liquidity also managed properly, right? So some can be REIT, cash, bond, and market. They can adjust based on the risk and the markets going on, basically at that point in time as well, right? So, second is like basically this is semi-liquid product, right? So they have to have redemption limit, right? So basically about 5% of NAV per quarter. Seem pretty small, right? So, but at the same time, the idea of this thing is to basically to protect investor, right? To make sure there's no fire sales, right? So because real estate is not something we can sell tomorrow, right? So to make sure orderly transactions so investor can get fair and the maximum value proceed, they're putting this kind of redemption limit of 5% per quarter, right? So the third factor, I kind of look at valuation as we talked about it before. Frequent and systematic credible valuation, either daily and monthly that matches liquidity period, right? So a lot of cases involve third-party independent valuation advisor, generally as well the valuation of accurate, reliable, or fair. They have considered the comparables, kind of complete by licensed appraiser with kind of comparable supported as well, right? So when the fund sell the asset, you don't have significant decline in NAV because NAV already reflected the valuation based on current market situation, right? So the fourth one, I kind of look at it more transparency, right? So if you go to any SEC filing for all the fund out there, you can find the discount rate, exit cap rate, and valuation metrics. Not only that, they're also very transparent on valuation policy and methodology. Like I said, transparency provide that basically public confidence, right? So, and finally, as well as we kind of show earlier, is operated by a well-known, well-experienced investment manager. In some cases, they're large investment manager, right? So, which means they acquire the asset that fit the profile, they're able to manage it and dispose it accordingly when needed, right? So there's tons of research, tons of due diligence within all this process, right? Within acquisition, asset management, and portfolio management. Julian, kind of flipping back to you, right? So I know that we met them kind of basically several months ago, right? So several clients pointing out turmoil in current NTR market in Europe that's undergoing. How do you describe the non-trade REIT market in Europe and UK, Julian?
Yeah, thanks, Robbie. So access to data is a little bit scarcer and more challenging here in the region, but pulling together this chart and focusing on the three domestic markets because NTRs are pretty domestic in the region, and Germany, UK, France are a good reflection of that. As you can see, they all have their own legal regime, which is more driven by national law. Uh, Although they all tie back to EU regulation, Robbie, you would expect there to be, some consistency, and there is consistency, but not across the board. For example, they're all, open-ended structures, which kind of makes sense. But as soon as you go into the mechanics of, liquidity versus valuation frequency, you kind of feel that there is a bit of that liquidity mismatch, which, seems to be the sort of underpinning theme, where if you look at Germany, these are daily traded products, but yet based on some of the information we have, it's usually semi-annual or annual valuations. Similar in the UK, where valuation frequency is a little higher, but then you have daily liquidity. And then looking at France, liquidity is kind of ad hoc. It's depends on the product, depends on the fund manager, and the actual frequency of the valuation is now semi-annual. Until last year, 2024, it was annual, but there's been a change in law to make it semi-annual, which was kind of driven by all that market volatility that we faced last year. So trying to adjust to limit that mismatch, but still a bit of a pathway forward. And then the interesting thing as well is when you look at valuation standards, although you do see some consistency around RICS Red Book standards, looking at UK and France, in Germany we have the German income approach, and typically the German income approach will have a more long-term view, to the valuation and the performance of your assets, whereas RICS, tends to be more current market value. So these are some of the differences that we can identify as we kind of go through this table. In terms of asset allocation, they all tend to be pretty much diversified, with some more weighted to office buildings here and there, but overall their exposure is to the broader type of real estate assets. And geographic location is an interesting one as well, because although UK and France tend to be domestic, you do see some pan-European exposure on the French side. If you look at Germany, it's global. They really invest, in all regions, and that obviously, also introduces, some challenges.
It's kind of interesting, Julian, when I kind of go through some of the research material, and I saw a few German funds that's quietly weighted toward the US asset, right? So many of them also include office building in the US. But what surprised me is that in some cases, the NAV continued to increase with no decrease at all, considering what happened to the US office valuation globally, and especially in the US. So how is that possible, Julian?
Yeah, and I think you're hitting the nail on the head there, Robbie, because this could be attributable to several things. It could be related to this German income approach, where you have this long-term, view of, your asset, and there is a tendency for, volatility to be kind of smoothened over time. Now, any severe corrections would obviously be reflected in the valuation, but there is that long-term view, that can probably justify this. And then in some other instances as well, you do have assets, office assets, commercial assets that are a little bit more resilient, and which would translate in less volatility from a valuation perspective. So given that we don't have the level of transparency that you have, you mentioned offline that SEC filings are also pretty granular in terms of valuation metrics. When it comes to looking into the portfolios of these NTRs, it's a little bit more difficult, to do that analysis here. And so, difficult question to answer, but it could be related to some of the points I mentioned. And maybe shifting gears on a related note is this discussion around private markets and public markets being, not necessarily homogenous when it comes to the valuation methodology and some of the best practices, that are followed. We both work on, public and private products. Would like to get your views on the NTR market in the US and how you would compare both in terms of valuation principles.
Yes, we discussed previously, right? So valuation is one of the most important factor in the success of NTR, right? So just because NTR is a kind of going through the public or retail channel, right? So a lot of open-ended fund, maybe more private market institutional, asset is asset, right? So in fact, when we started valuing the initial NTR and provide guidance in NTR, we actually recommend using the general valuation process for the open-ended fund, typically for the private market, right? So which are much more rigorous than other processes for other fund at that time, such as closed-end fund, right? So, but the real estate market have experienced downturn. There's definitely much more scrutiny and more defined valuation policy that we put in place over the last year or so, right? So this continued improvement of valuation process is needed because you have to adjust with the market and the environment, right? So there's also an emphasis on benchmarking and analysis, kind of analytics and comparison, kind of competing fund to make sure that valuation are consistent. right? So majority of the valuation for NTR client are monthly, right? So therefore asset is valued monthly as well with oversight for independent valuation advisor. Valuation are generally using DCF, discounted cash flow, right? So income approach. All valuation have to be supported, right? So with market data, insight provided by Altus and Altus colleague, the largest appraisal community, right? So sales comparable, data from client, market report, and various different other kind of available data out there, right? So again, as we kind of show as well, that we deal over 5,000 assets per quarter, which means 5,000 assets per month, right? So because of the volume, the set of monthly process become just as important as the value, right? So if you look at this slide, right, so Julian, like, so we have optimized the workflow in the valuation process, right? So what that means is asset manager, appraisal, and Altus will collaborate in the valuation process in order to what we kind of call it, utilize the gold valuation standard, right? So all these things you can look at as appraisal workflow, we utilize what we call Argus Value Insight, right? So for management of the appraisal, right, for communication, for the review, and we also rely on the benchmark as well, right? So with all this workflow, both Altus and client have their own control in place to make sure that the valuation makes sense on MSA level and property type level basis as well. Make sure that the valuation is supported, therefore NAV are supported, right? So kind of Julian, flipping back to EMEA, right? So what is your view on the current best practice on EMEA non-trade REIT space or Europe and UK, right? So how do you feel or any thought about the market? Do you think there'll be benefit of some of what we discussed before? And how is it different than the current open-ended fund that you guys working on?
Yeah, no, a great question, Robbie. So, I mean, starting maybe with the private markets and more the institutional space, we have seen a steady adoption of DCF over the past 2 to 3 years, primarily driven by global investors, which are behind some of these funds. But interestingly enough, we have seen some of this DCF adoption trend kick into the non-traded REIT space. It's more fund manager driven. I think there's also an acknowledgement that because they are competing, for similar assets relative to private markets, these are core strategies as well to some degree. There's no reason why they shouldn't tap into that type of data set as well. So meaning comparing themselves not just to their immediate peer group, the NTR peer group, but also to those institutional fund managers. So we have seen that appetite to be able to tap into those additional subsets for benchmarking purposes, and this appraisal workflow that you've shown, in addition to having a consistent deployment of of DCF, certainly helps in that direction. We talked about France, changing its law during the course of 2024 to increase, the frequency from annual to biannual. I think it's a step in the right direction. I think there's still, room for progress, but it definitely shows, a trend. And then this liquidity mismatch that we've been talking about has been on the radar of the French regulators, the UK regulators, the German ones as well. There have been instances of gating over the past couple of years for some of these NTR domestic products, and so certainly the need to the need to look at some of these best practices and certainly think about, okay, what is the gold standard? You're showing this workflow. How do institutional products work, and how could we take some of those best practices and apply them to the NTR space? So definitely a trend there. If I take this appraisal workflow, we kind of break it down. It does mean valuation workflow is going to become important. The ability to document, to track, to understand where you're sitting in your monthly, quarterly, or semi-annual valuation process. Who's the appraiser? Are there any issues that have come up as I go through the draft, the revised, and the final valuations? What are those issues? Have they been addressed? Are they documented? So everything around controls and transparency we believe is going to become front and center as the NTR industry here continues to evolve. And this all leads to what we talked about earlier, Robbie, is the ability to benchmark yourself to peers, not just your immediate set of NTR peers, but also a wider data set of institutional players. And so that relative valuation analysis, or the ability to do that relative peer analysis, is also going to become more and more important in order for the market to grow. So, we talked about a lot of things, Robbie, and a lot of different topics, but if we were to wrap up and sort of conclude on some of the key takeaways, and I would say the recommendations as well, coming from you with your experience on, what is considered as best practice from a valuation perspective in the NTR space, what would be the key takeaways?
Yeah, in my mind, kind of boil down to two main factor. But the most important thing is you have to kind of consider investor into the NTR, right? So I think that the two factor, first one I would say is safeguarding the public trust, right? So which means you need robust control, you need better transparency, right? So second one is NTR a regulated product with retail investors coming in and out, which means valuation should be the main focus, right? So we need to make sure that the NAV, the NAV that are supported and credible. So how do we accomplish this two factor? I think one is utilize the industry recognized valuation services and solution, right? So that should ease the process, right? So utilizing third-party valuer that's competent and licensed, and also independent valuation advisor to administer the process. I think that's where Altus can help, Julian, right? So a lot of our clients, as we have significant experience on this, we have the tool, we get the professional. Just for example, what you showed earlier, the AVI workflow, right? So it's a SOC compliance system and processes ensuring kind of control and associated with financial reporting. Again, at the end of the day, is how do we keep safeguarding the public trust?
Yeah, no, I think that was a great wrap up, Robbie, and I wanted to thank you for your time and for providing us with your experience in the space. Wanted to thank the wider audience. We hope you enjoyed this webinar. Please don't hesitate to contact Robbie or myself to get more information. Any questions, please use the email address here. We're happy to answer them. Happy to also talk about how we can help if you have any questions. And please also note that you'll be able to rewatch this webinar on demand, and it will be sent to you via email so that you can access it. So thank you again, everyone, for your time, and have a great day.